Hey everybody, this is a debriefing of the earnings call and the earnings report by NIO. A Patreon member asked me whether I do a short version. Obviously I've been live streaming as always. It was about an hour where I did walk through my personal estimations versus the actuals for the earnings report, and then I did live stream the management call on top. You find the recordings on my channel. But now here the key takeaways, if you haven't watched those lengthy videos, which I would recommend to do actually, because I think it's that sort of a due diligence that is necessary to do, especially given, and that was one takeaway, the very poor questions by the analysts during the earnings call. In my opinion, most of the questions were pointing at things that we already knew or that have been asked in previous earnings calls, and so unfortunately that did not give us a lot of new insight, on the plans of the company, of the state of the development and stuff like that. So yeah, generally that was one of the more unexciting earnings calls. But first of all, about the report, I compared it mainly to my personal estimations and my expectations, and the revenue came in line. We usually know that that is going to happen simply because we know how many cars they've sold, and that's also similar to the analyst estimations, came in online on the revenue side. On the bottom line, this is where I think my personal estimations have been off. So I was already looking at a decrease in the net income. So hopefully having lower costs and therefore with higher revenues being able to show a little step towards profitability. That didn't happen in this quarter, and so have some of the analysts also had similar expectations. However, there are different analysis out there. Some of them have said it's going to be like that. Some said, hopefully NIO can improve already in there. But basically, the bottom line here is I think there wasn't a positive from the net income, I should say. So therefore, a rather neutral report, some say mixed report, and I would say, yes, indeed, that's been the case. I did, however, have a very positive takeaway about the guidance, because in my opinion, I was looking at a very lackluster Q1. Actually saw a year-over-year decline in deliveries, estimating 27K as a guidance. However, we see between 31 and 33K as a guidance. In my point of view, a optimistic outlook. However, some of the media reports out there said that this was a rather not so well received outlook. I'd challenge that, but I even think that most of the analysts did not see a big jump, basically because we already know January and February numbers due to Chinese New Year's. They are usually also lower, and I think in March it will be a stretch actually even to catch up to this guidance. But I'll take it if they make it. In my point of view, that would be great if they can already show year-over-year growth. Which basically nobody is assuming at this point in time. So that's for the earnings report. Again, for the earnings call, not many insights. In my point of view, of course, we had the announcement, first time official announcement for the sub-brand for the Alps, and positioning there as a challenger to the Model Y. Again, I reserve my personal opinion on this car until I see more details. I'm not gonna hype it as of right now. I initially invested in NIO just mainly for the premium brand. I do acknowledge that premium to luxury branded cars are currently facing slower growth rates. Let's put it like that, and the market is clearly not happy with that. But I'm all about the NIO brand, but I'll take the sub-brands if they are convincing and good, and I do assume that they might be the volume driver and the growth driver. But as I've stated before on the channel, what I think those cars need to show is much more pragmatism and a better value to price ratio. Let's put it like that. So until I see that actually coming out with the cars, I'm not estimating too much. However, we have to clearly see that this is one of the catalysts coming out this year, contrary to some of the downgrades reports, which are saying, oh, NIO doesn't have any growth drivers this year and it's gonna disappoint. So yeah, I think that was one of the takeaways. The more interesting one was actually the bombshell for the very last question, in which finally some of the analysts asked about the bottom line, the cost indications going for this year. And for the first time, the CFO said they are going to have lower capex, so capital expenditure, lower investments in this year compared to last year. And that's something which I mentioned, by the way, in previous earnings calls, that the CFO should actually do and come out and give us a way of understanding how NIO is looking to break even. And basically, the outcome after this call is that they are guiding towards growth in Q1. They're guiding towards possible growth also in the NIO brand, because Li Bin was speaking of an inflection point also in the premium to luxury segment, which is usually growing slower, but he thinks there will be more adoption. So take it as a promise. And ultimately, obviously, also the launch of the sub-brands. So with that, and on the same time, less capital expenditures, that's actually what I'd like to see, the pathway to lower net income numbers in terms of lower losses. So if that were to happen in 2024, I think that would be well received by investors. And yeah, one cornerstone of that, I think, could be other sales. So I took it positively that NIO was talking, or Li Bin was talking about profitability, break-even points, but also the revenue streams of battery swapping and NIO Power in general. So they kept on emphasizing that, and I think they should put this narrative out more in front, because that's also what I said in previous videos, that I think 2024 could all be about a shift in investor perception about battery swapping, which they currently see as a liability, and I think in the future will be regarded as a money printing asset. And that's coming in at other services, where we now see this year a 69%, I think, year-over-year growth, if I'm correct. I'll have to look at the numbers again. But generally, the growth numbers of the other sales have exceeded the revenues by car sales, and that's interesting. So we are stronger growing in those areas such as battery swapping services, cloud revenues, and all of the other services connected to NIO Life. Those revenues are going up faster even than the car sales themselves in the last year, which was about 30% year-over-year growth, plus the profitability is getting better. Yes, it's also still negative, so it's a negative 25% margin for the whole year, but it has been closer to 30% the year before. So we see both improvements on the top line as well as on the bottom line of other services, and I think that could be the story for 2024, given what they also mentioned in the last question, or the last answer to the question, which was that the battery swap stations in the future will be partly built by the partners, which they have, the partnerships with Geely, Chang'an, and so on, which they have announced. And previously, I think investors never put a assumption in their business cases. They just took it as a new non-material thing, that these partnerships are being established. But now that we know that those partners will be taken over the cost to build out some of these swap stations, that gives NIO a nice edge here and less of capital expenditure in starting this year, basically, but continuing later on. And I think that's powerful. That's one way of showing investors a path to profitability. And yeah, unfortunately, that has been dropped only in the last Q&A. I would also have loved to see analysts ask the question how the sales KPI are going regarding the build out of the sales team, because in the past, Li Bin mentioned that they are hiring new sales staff and that they need to train them. So I would love to hear an update on that. We haven't got that, but generally, these have been my key takeaways for the earnings this time. it seems we need still to be waiting a bit more until we see those positives on the bottom line, which I think will ultimately also move the stock. And yeah, meanwhile, 8 billion in cash. I just discussed in a Patreon community the other day that, putting a 5% interest rate or yield on them, if you just put it into US treasuries, could already generate 100 million in additional revenue here for NIO. But I know this math is a little bit off, but just joking, giving you kind of a feeling for what NIO could do with that money, and how well the cash position is finally after raising all of that money, which I know has been a pain for investors, but now also is a benefit for them, since they have a longer runway, even at the current burn rate. It's about 2 years, but hopefully that's going to be even longer, and hopefully also enough for breaking even. And in the meanwhile, that money should be worth something on a balance sheet right now. Anyways, that's it for now. Hope that's short enough. Thanks for watching. See you in my next videos.